All right, let's dive into a really wild story from the world of biotech today. We're talking about Atara Biotherapeutics, a company whose stock has been on an absolutely bananas roller coaster ride. And let's just get right to the headline number. Just look at that. After the market closed, Atara's stock, that's ticker ATR, shot up by more than 55%. That is the kind of massive, overnight jump that just makes your jaw drop. So when you see a number like that, you have to ask, what on earth is really going on here? A move this big doesn't just happen by accident. We're going to peel back the layers and figure out the real story behind this incredible surge. Now, usually the first place traders look for answers is in the technical data, the charts, the indicators. But with Atara, honestly, looking at the technicals only makes this whole thing even more of a mystery. And this is where it starts to get weird. At a glance, everything looks great, right? The overall summary, the moving averages, they're all screaming strong buy. But then you dig into the details, and key short-term indicators like the MACD are flashing a clear sell signal. It's totally contradictory.
So this is the headache for any trader. Your long-term view looks amazing, but the signals that measure short-term momentum are telling you to get out fast. Data like this gives you no clear direction, which makes a sudden 55% jump feel like it came from completely out of the blue.
Okay, so if the charts are a total mess, what about the actual health of the company? Let's check out the fundamentals. And this is where the story takes another bizarre turn, because from the outside, Atara looked like it was just trying to survive.
I mean, just look at this. This does not look like a company about to have a massive stock rally. They've been discontinuing major research programs, they've laid off almost a third of their workforce, and they're in the middle of these drastic cost-cutting plans. These aren't signs of growth. These are the moves of a company fighting to keep the lights on.
And to make matters even worse, their own reports say they only have enough cash to last into early 2026. So let's put it all together. A shrinking company laying off staff with a really short cash runway. How could that possibly lead to a 55% surge in stock price? It just doesn't add up.
Well, here's the twist. The answer isn't in the charts, and it's not on the balance sheet. The real catalyst for this explosion is a high-stakes regulatory drama playing out with the U.S. Food and Drug Administration, the FDA.
Now, to understand the good news, you first have to understand the bad news that came before it. Back in January, Atara got what's called a Complete Response Letter, or CRL, for its key cancer drug, tab-cel. And a CRL, well, that's basically a rejection letter from the FDA. It was a devastating blow.
And nobody saw this rejection coming. It totally blindsided the company and its investors. Insiders apparently called it a complete reversal of what the FDA had been signaling before. So one minute they think they're on the path to approval, and the next the rug is completely pulled out from under them. The company's future looked incredibly bleak.
But then, a lifeline. Atara's partner, Pierre Fabre, successfully requested a Type A meeting with the FDA. And you gotta understand, this isn't just a routine check-in. A Type A meeting is an urgent, high-stakes session designed to solve the exact kind of major problems that are holding a drug back. This was their shot to get back in the game.
And this is it. This sequence of events is the direct cause of that 55% stock explosion. Atara and their partner put together a new briefing book with fresh data. The FDA actually granted them this crucial meeting, and all of a sudden, the door to resubmitting their application and getting their drug approved was kicked wide open again. Hope came roaring back.
So the mystery of the big surge is solved. But, that just leads to the next massive question. Where does Atara actually go from here?
Well, despite all this excitement, Wall Street analysts are still all over the map. I mean, you can see it right here. Out of 4 analysts covering the stock, you've got 1 buy, 1 sell, and 2 just sitting on the fence with a hold. That tells you there is still a massive amount of risk and uncertainty here.
And this chart really puts that gap between investor hope and analyst caution into perspective. The average 12-month price target from the experts is just $5. But after the surge, the stock was trading at over $8. That shows you that investors are betting way more aggressively on a huge comeback than the professionals are. Which brings us to our final, critical question. The company has this incredible lifeline, but its entire future now seems to be hanging on the outcome of a single meeting with the FDA. So, is Atara on the verge of a historic biotech comeback, or are all those investors who piled in about to face a very painful correction? We are just going to have to wait and see.